Looks like I've got 7 o'clock. I'll wait just a few more seconds to see if anybody logs in, because I do want to talk about the next couple of weeks in terms of where we're at right now and what to expect. I know if you look at the class schedule right now, I believe it said the exam 2, I think, would have been this week. And of course, we're not following that schedule because I think we took a detour. We spent a little extra time on the first couple chapters, which is okay. But I do want to update you guys on our schedule, where we're at, where we're going tonight, next week, and the next couple of weeks. So looks like we've got 7 people signed in right now. And I'll wait just a few more moments before I begin. So again, as I'm talking, let me know if you can't hear me, if you're having any audio issues. I want to make sure that you hear that, or in case there's any issues, I'll try to fix it. I had an issue this morning with my Wednesday morning class, and it seems like it just kind of corrected itself through the lecture. So, you know, technology again is pretty good when it works, and when it doesn't work, it's pretty bad. So in any case, so just about another minute or so, and then I'll start. Looks like I've got another person logged, and I got 8. So wait just a little bit longer, and then we'll start. I'll kind of give you an update on what's going to happen tonight and the next couple of weeks as well. Looks like I had 10, and then another person somehow they must have gotten kicked out. They're probably trying to log back in. There they are. All right. All right, so let's start. So again, welcome back. Wow, today is, what is it, October 19th? It's kind of crazy to think that we're almost into November. And I think this is technically week 9. All right, this is because the midterm was last week. So this is actually the beginning of the second 8 week of the whole term. So where we're at tonight. So first of all, we're in chapter 5. We're about ready to finish it. I just checked the Connect grade book to see if how many people had submitted the assignments. And I think we got a few people that have submitted the chapter 5 assignment. So I know that a majority of you have not done it yet, which is fine. Remember, the due date for chapter 5, homework and quiz, is this coming Sunday, October 25th. All right. So that's going to be the due date for this week. For tonight, there's one more problem I want to go over with you. And of course, I'll pause in a moment to see if you have any specific questions on chapter 5, and I can go back over any of the adjustments we've looked at so far, but we'll do that. And then I do anticipate at some point time tonight, whether it's earlier, I think it'll be before our break, but we'll see. Some point tonight, we'll get into chapter 6, which is on the concept of closing entries. And that's the last part of the accounting cycle. And so regardless of where we get tonight with chapter 6, next week would be finishing chapter 6 and then probably doing some review for the exam. So we're looking at right now, most likely is your second exam will be the week of November 2nd. Okay, so if you go back and check out the original class schedule, we're essentially pushing the exam 2 back by 2 weeks according to the original schedule. So as it stands right now, I really believe that that's probably going to be a good date to tell you right now. So, barring if there's any issues right now going on with chapter 5, which I'll find out in a moment. But, I'm thinking chapter 5 and start 6 tonight, get into 6 a lot tonight. Next week, we'll finish chapter 6 and then have review. I'll do some review with you next week. And then, of course, there'll be a study guide. And then I'm right now planning tentatively for exam 2 to be on the week of November the 2nd, which is only 2 weeks away. All right. And so that's about, I'm not going to take you out any farther than that because I don't want you to get stressed about anything else in the course. But at that part, this is where we're at. We're in pretty good shape in terms of content. We're the first 6 chapters really cover everything. And after that, it's just a lot of repeat stuff. So having said that, looks like we've got 11 people tonight. Before I bring up my screen, I'll do a screen share in a minute. Does anybody have any questions or issues that they're having with Chapter 5? Anything that you want to address that I can maybe point out to the class to help the class if anybody else is struggling with any of the adjustments, anything at all? Feel free to unmute yourself if you have a question or if you have anything you would like me to address. I'll do that first if there is anything. And if there's not, that's wonderful. But if there is, I definitely want to try to help if there's anything at all. All right, well, if something comes up later, that's fine, just let me know. But in a moment, I'm going to put up, I want to go back to this worksheet just to make sure you know what to input into the worksheet. And again, I'm doing this for a couple of reasons. Number one is you need to know how to use this thing called a worksheet in your homework. And number two, when you get to the class project, because there's a project that I'm going to have you do after Chapter 6, in that class project, which is again an online problem in Connect, you're also going to have to use parts of this worksheet. So it's not just for the purposes of doing the Chapter 5 homework, but it's all, you also need to know how to use the worksheet when you do the class project in a few weeks. So I'm just telling you, why I'm showing you this thing called the worksheet. I want to make sure you know how to use it. So, all right, so if there's no questions before I bring up my problem, there's nothing. All right, so let me do this. So hang tight just for a second. I want to make sure I get up my screen here. I'm going to change my screen just a second. There we go. All right. And let me do a screen share. I'm just switching my monitors. I like looking at my right monitor better than my center monitor. It's a little bit bigger. And it's just kind of like my comfort zone. So right now I'm sharing my screen, and in a moment I'm going to bring up the student view because I want to get into the problem, how you see it. But just one more thing, just remember Chapter 5 and chapter quiz assignments. I put a due date out there right now. Again, it's due by October 25th. All right, so let me do that. I'm going to get into the student view, and we're going to get back into the Chapter 5 homework. Oh, there we go. All right. And there's the homework. Let me click it. Okay, the problem I'm going to bring up, it's a comprehensive problem. It's number 8. So I'm going to go to the number 8 problem. That's probably a quicker way to do it, but I'll just there. All right. So in this problem, you notice at the bottom, and again, let me know if you can't hear me or if you can't see my screen, but they are giving you a worksheet to start with. And in this worksheet, they've already given you a trial balance. Note that it's for the month ended January 31st. So this whole problem involves the month of January. And if you recall from what I had talked about last week, to deal with adjustments, it's all about the time period. You got to say, what time period are you trying to report? So in this problem, I'm going to walk you again through this worksheet, and looks like we've got 4 adjustments they want us to make. They're right up here. Notice end of the month adjustments, supplies, prepaid advertising, rent, and depreciation. And so we'll do those. We'll complete the worksheet. We'll also prepare the financial statements. I want to show you how you do that because you'll have to do this eventually when you get to the projects. I want to make sure I've demonstrated how to do this. And then we'll wrap it up and we'll do some journalizing and posting of the adjusting entries. So just like we did before, we'll do the journal to the ledger aspect, which is what we normally do as well. Okay. All right. So first requirement, again, on this first one, it says to complete the worksheet. And so we'll start with the adjusting entry. And then I hear some background noise, so let me mute everybody. And then you could always unmute if you need to, if you have a question. So let me go ahead and mute that because I heard some laughing. I don't want anybody to get distracted. So let's first start off with the adjustments. All right, so remember, this is before we do the actual adjusting entries, but this is just for the worksheet. So we'll start with supplies. And it says supplies were purchased on January 1st. Again, this is the current period. And then they did an inventory of supplies at the end of the January, which is $3,200. That just means that they did a physical inventory count. So what we need to know about this is we need to go down to that trial balance and find the supplies account, which is right there. And the supplies account right now says $19,500. So what that represents is that would be the supplies amount that they purchased on January 1. So to do the adjustment, they tell us that we've got $3,200 of supplies left. So can somebody tell me, how are we going to figure out how much would be the amount of supplies that they used? Does anybody know? 19.5 is what we started with. That's what they purchased. And they're telling us is that 3,200 is what is left. So we have to do an adjustment. So can somebody tell me either the amount or what would we do to figure out the amount of the adjustment? Does anybody know? And anybody can volunteer and answer whether they want to or not, but just kind of curious. It helps me kind of gauge to see what everybody thinks or what you know about this problem. Or if you don't know, let me know that too. But can anybody come up with a rationale in terms of how we would figure out how much supplies we would need to adjust for? Does anybody know? Well, let me give you a hint. And again, I like to draw T accounts. So if I drew a T account, which, you know, is essentially our ledger, and I wrote in supplies, think of this as our ledger, and we're saying right now in the ledger would say that they have a balance, a debit balance equal to $19,500. That's when they say they purchased some supplies. That's what the ledger would show. Right now, they did a physical count, and $3,200 is what is left. That's what they currently have in their supply room. So giving you that perspective, does that help? Does that help anybody determine then what are we going to have to do to figure out what they used in terms of supplies? Does anybody know?
Subtract.
Okay. So subtract, so take 19,500 and the ending balance of supplies should be what, 3,200, right? So again, I'm just trying to give you a visual. So we've got to plug in how much they have used. So you're exactly right. You just take the difference.
16,300.
Yeah, 16,300. Okay, we'll plug it in. So we'll say 16,300. And I think, was that Diane? Is that what you said? That's pretty good. So 16,300.
Yes, sir.
Thank you. We're going to say that is the supplies we used. So we would then need to go to the worksheet and enter those into the two columns. So we go, erase that. So find supplies expense and put 16,200 as a debit, and then go to supplies and you would enter 16,200 as a credit. So essentially you're going to be debiting supplies expense and crediting supplies, and that'll be the actual adjusting entry we're going to do when we get to the journal. Okay, so that would take care of part A. That's going to be our first adjustment.
Okay. I'm sorry for interrupting you.
No, you're fine. You're fine.
Last week when you were going over this, my computer was acting crazy, so I had to send it in, and I didn't get most of what was going on, and honestly, I'm just now using my daughter's laptop. I haven't had a chance to really look at anything. So when we finish with this, would it be possible for you to go back to number 1 so I can actually understand I mean, I know what to do. I
Well, let's
want
do
to be.
yeah, let's do it this way because I recorded, so last week's lecture, all of it is recorded, everything I worked out. So you can go back and play that MP4 video anytime you want. In fact, I've got it routed through YouTube. So if you go into Blackboard, the Zoom meeting recordings, I actually recorded everything. So you can actually just play that video. So that's one thing. The second thing is if we have some extra time tonight, we can go back and pull up the problem. We can pull that up. Okay.
All right. Thank you.
But just for terms of time tonight, this problem right here is essentially the same as that problem I was working last week on, because we were doing a worksheet problem, except this problem actually does more. So
okay.
I think this is a good recap, not just of last week, but a good summary in terms of everything you got to know in chapter 5. Okay. But by all means, Diane, yeah, the Zoom meeting recording, it should be a good audio on there. So, and you can play it at any time this week, and hopefully that'll help you get caught up and go back and review a couple terms. In fact, I would even play that before you even maybe attempt the homework. That might help. Okay. All right. Is there any other questions on the supplies adjustment from anybody? All right, let's look at prepaid advertising. That's the second one. It says prepaid advertising was signed on January 1st, covers a 4-month period. So for prepaid advertising, we need to go down and find the prepaid advertising account. So let's go down. I'm trying to get my mouse to, as I go back and forth between screens, sometimes the mouse doesn't want to work, but let's see. All right, prepaid advertising right now says $24,800. So what we've got to look at here is, I'll write this up at the top here. So if we've got 24,800,
62 a month,
and it's is it 4 months? It's a 4-month period. So yeah, so did you divide by 4?
Yes, sir.
Okay, cool. Yeah, so I think that's right. 24,800 divided by 4, you got it. So it's $6,200 per month. So that essentially is what our advertising expense would be for each month. So we're going to have to go to prepaid rent. I'm sorry, when I say prepaid rent, prepaid advertising and advertising expense, and plug in that adjustment into the worksheet. So we'll do that right now. So I'll go ahead and type in for advertising expense, I'll type in the 6,200 debit, and for prepaid advertising, there's the 6,200 credit. All right, so that would take care of that adjusting entry for the month. All right, so then the next one is part C, which in this one, they just give you the amount. They say rent of 4,200 has expired. So we know that'll be our rent expense. And so I'm looking to see if they have any prepaid rent, which they do right there, which is 50,400. So we would need to make that adjustment, which again, it's again 4,200.
Oh.
So we would debit rent expense 4,200 and credit prepaid rent 4,200 right there. So that would be the two accounts you'd want to adjust. The rent expense gets debited, I'm sorry, yeah, and the prepaid rent would get credited. Okay, so that would take care of part C. And so then the last one, which I don't think they did a good job of explaining this, but let me detail it. Remember, depreciation is always on the equipment. And straight line method, 10 years, no salvage value. So to figure out the depreciation expense for the month of January, you first need to find the equipment account, which is right here, and that's going to be 67,200. So again, what that represents is the cost of your equipment. So our formula, remember, for the straight line method is cost minus salvage value divided by the estimated life. So the cost of the equipment is 67,200 minus 0, because that's the salvage. And then the question is what do we want to divide by? So if it's 10 years and we want the end of month, we want 1 month, just take 10 years times 12. That's going to be what, 120 months. If you divide this by 120 months, that will be how much you want to allocate to depreciation for the month of January. So if you plug that in, I'll do it on my calculator, 67,200 divided by 120, it looks like that's $560. So I go down to depreciation expense, plug in 560, and then find accumulated depreciation credit for 560. And then I believe that would take care of all your adjusting entries. All right, well, adjustments. We'll get to the actual journal entry when we get to the journal. But at this point, we've got the debits equal the credits, 27,160. These are essentially 4 different types of adjustments we just made. And before we get to the adjusted trial balance, just as I go back and make a note, if you look at what we actually adjusted in terms of the accounts, every single account that we did an adjustment for essentially was an asset account. Think about it. We had supplies, all right, supplies, which is an asset, prepaid advertising, which is an asset, prepaid rent, which is an asset, and equipment, which is another asset. So we're taking these, essentially, you could probably call all of these prepaids. Essentially, these are all assets you purchased in advance, and we're making adjustments because we're using them. Remember, accounting is all about time periods. And so to make these adjustments, we've got credits going to these assets, and then the offset goes to expense accounts. Every one of these has an expense associated with it: advertising, depreciation, rent, and supplies expense. So think about this. You've got your expense accounts, which is your income statement, and you've got your asset accounts, which is your balance sheet. So all these adjustments will be combined with these initial balances, and then we're going to put these into the adjusted trial balance. Okay, now to do that, a lot of this involves copying the numbers over. So for cash, I'm going to go to the adjusted trial balance column, start with cash, 70, again, you just pull the number over as is, 73,000, very easy. Accounts receivable, 27,200, note I'm putting it into the debit column. When I get to the supplies, on this one, this is where, again, they've already told us that the supplies balance, what did we say, it was 3,200. So this number right here should be 3,200. And again, the way you get that is by taking the 19.5, which is a debit, subtracting out the credit of 16.2 to get that 3,200. That's what the ledger should say right there. Okay. Now, a couple more again, you got the prepaid advertising. So if you have 24,800 and it looks like you've got 6,200 left, or as an adjustment, just take the 24,800, subtract the 6,200, and that would give you $18,600. That's the balance that's left in prepaid advertising. And then likewise with the prepaid rent, it looks like it's 50,400 minus the 4,200, you'd have 46,200. I would plug in right there. Okay, so let me pause for just a quick moment. Does anybody have any questions about where I got these balances for the adjusted trial balance? Great, now this is clear. All right, cool. All right, now, and I'm going to keep going. So for equipment, I'm going to pull over the 67.2. Got that. For the accumulated depreciation, it's 560 credit. Accounts payable, 33.1 credit. Capital, 122,000 credit. You got the drawing, 16,000. Fees income, 148.2 credit, and then the rest of these I'm just going to plug them in as they are. So you got 6,200, 560, 4,200, 21.4, 16,200, and then the last expense is 3,800. And I must have typed something in wrong because I'm not balanced. Let me go and check my math. Let me check my numbers, because see how right now, So I'm kind of glad that this doesn't bounce where it says 303,760 and 303,860. See how those should balance? So I must have transposed the number. Let me check real quick. Let me see if I misadded something. Let me go back and check my math. And maybe you guys caught it before I caught it. So let me go back and check when I did some differences here. So looks like I may have transposed the number. I'm only off by $100.
Supplies 3,200 or 33? 19.5 minus 16.2.
Yeah, you're right. That should be 3,300. Yeah. I think that fixes it. So, but that brings up, hold on, let me go back. Because the inventory should have been 3,200. So that tells me then that my math must have been wrong earlier. Hold on. Supplies was at 19.5, right?
So then it's your supplies expenses wrong.
Yep, 19.5 minus.
Your supplies expense and your supplies shouldn't be 16.2. It should be 16.3.
Correct. It should be 6. You got it. Let me go back. So there was my mistake right there. You got it. So supplies expense and supplies should be 16.3. And then this should be
32.
Should be 3,200. And then that means that this supplies expense down here should be 16.3. There we go. So yeah, so there was my bad. So I had the wrong number in for supplies. So that's one way, like when you're going through this at home or you're doing any of this stuff individually on the worksheet, anytime you plug something in, and at least up to this point on the worksheet, your debit should equal your credit. So in this case, the error is I put in the wrong number for the supplies expense. And you see how that threw everything off by like $100. So I believe at this point, everything looks fine. Okay, so right now we've got 303,860 equals 303,860. So right now we're at the adjusted trial balance. So the next step on this worksheet is we want to fill in the income statement column and the balance sheet column. We'll start with the income statement. All you want to do is from the adjusted trial balance, you want to pull over the accounts that would go on the income statement, which are your fees income and all of your expenses. Because remember, your income statement is just revenues and expenses. So if I go to the column, go right here on your income statement, I'm going to type in 148.2 as a credit to your income statement. And then on the expenses, I'm just going to copy them over. 6,200, 560, 4,200, 21.4, 16.3, and 3,800. Now, notice right now when I do that, you've got total credits of 148.2 and total debits of 52,460. These debits represent your expenses. This credit represents your revenue. And of course, if you take your revenue, subtract out your expenses, in this case, that should give you a net income. And so what we want to do here is you'll take that 148,200 minus the 52,460, and that difference you're going to plug into this cell right here. You're going to put 95,740, and notice how when I do that, your debits now equal your credits, and then you want to go over to this cell number over here, and then you're going to get a drop down arrow, and when you go there, what you want to do is click the drop down arrow and type in net income. Right now, our net income is 95,740. So that is how the worksheet wants you to enter it. Okay, now the income statement part is done. The rest of it is your balance sheet. So again, I'm just going to copy over the accounts on your balance sheet, starting with cash, 73,000 debit, and we got 27.2 debit, 3,200. Again, this is from the adjusted trial balance, 18.6. 46.2, 67.2, 560, accounts payable is 33.1, capital is 122. Now, when you get to the drawing I know this is going to be weird, but they want you to put the drawing on the balance sheet, even though the drawing doesn't technically get reported on the balance sheet. They still want you to take that drawing number and you want to put this right here, the 16,000. Go ahead and plug that into your debit column there. Now, you'll notice when I get to the bottom here, again, this is of your balance sheet, notice that you've got total debits of 251.4 and total credits of 155,660. So if we did this thing correctly, this balance, this net income balance, if I were to plug this number into this cell right here, that should be the difference that would make those debits equal to credit. So let's try that. So if I plug in 95,740, you'll notice that right away, everything's balanced. Notice you get 251.4 equals 251.4. So notice this number right here represents your net income. And at this point, your worksheet is complete. That's how you'd have to figure out the worksheet. So again, it's just a technical thing I wanted to show you. I do not test you on how to complete a worksheet. You will not find any quiz or exam questions that say, okay, for this debit column has to equal it. I don't do that. But I'm just trying to show you tonight, just to give you another video, when you go back through this and actually do it yourself, if you haven't done it yet, this is how you're going to have to enter the worksheet. And then when you get to the project in a few weeks, you're going to have to do the same thing then. So just trying to give you a video practice on how to do the worksheet. All right, now, at this point of the problem, go back up, get my arrow back up. So we did basically part one, which is completing the worksheet. So just take a quick look at it, what I just showed you. Does anybody have any questions in terms of what I entered to show you what you have to do on this thing so far? Question?
In the balance sheet, you're subtracting the debits from the credits.
Yep. Yep. When you get to the balance sheet part right here, that 251.4 versus the 155,660, the difference should be the same number as your net income. Okay. That difference would then show that your debits then equal your credits. Okay.
Okay, but truthfully, the drawings wouldn't be on the balance sheet, though, right?
Very good. Yeah, no, it's weird. You're exactly correct. But just on this worksheet alone, you have to put it somewhere. So the way they want you to do it is they just want you to put that whatever balance you have in drawing, and just put it into that debit column on the balance sheet. But you are 100% correct. When we get to the financial statement, you're right. Drawing does not show up on your balance sheet. But you know, the people who came up with the idea of this worksheet, that's how they created it. So and just to tell you guys an old story, I graduated high school in 1989. It's a long time ago, 31 years ago. And I took an accounting class in high school my senior year. That's kind of how I got into accounting, the idea of majoring in accounting, believe it or not. And I remember doing worksheets very similar to this, not on the computer, of course, but we did these things manually in class. So, and this goes back way before then as well. So, you know, the rulemakers in accounting, they still use worksheets just to demonstrate how to get to the account balances and how to get to the income statement or the balance sheet. But you will not ever do this in the workforce. You'll never do this. This is just a specific technical thing I'm trying to show you. Think of it as a tool to help you get to the answer, at least in this class. But everything else, in terms of a journal and a ledger, that's part you definitely need to understand. But we're just using this worksheet as a tool to get to the financial statements. Okay. All right. Was there anything else on just the worksheet that we just completed? All right. Now, next step then is what they're going to want you to do is to notice it says requirement 2, which is to do the income statement. Well, all you have to do at this point is you're just going to be referring to the worksheet. So the income statement is really already done. You already figured out that it's 95,740 is your net income. And your balance sheet is almost done, but you can't really do the balance sheet only from the worksheet because remember, you have to update that capital balance. Remember, and we'll do that on the statement of owner's equity. So let's first start with the income statement. And again, you'll start with, you got to find your revenue account, which in this case would be fees income. You plug that in right there. And it's 148,200. So you'd say 148,200, that's your revenue. And then for your expenses, you're just gonna go back to your worksheet and copy them. I just copy them in the order that they give you. You got advertising. So you just click the cell, it gives you a drop down arrow, advertising expense. Then it looks like you've got depreciation. And to me, the order doesn't really matter, but I'm just kind of following their order in terms of how they're giving them to us. Rent expense. Again, looking for the rent expense account there. Salaries expense. Click that. Then we've got supplies and then utilities. There it is, utilities, and then I think there's a couple more utilities. And nope, I guess that's it, supplies. Okay, so then let's just copy the amounts in. So advertising was 6,200, you just plug that in right here. Then you got depreciation, which I believe was 560. And then rent expense, which is 4,200. Salaries expense, which is 21,400. Supplies is 16,300. And then utilities is 3,800. So once I plug that in, notice that there's your net income. So we agree at this point with the worksheet, there's your 95,740 net income. So just remember that your income statement is financial statement number 1. All right, this is your income statement for the month of January. Our second financial statement then will be the equity statement. And remember, this net income is going to be transferred or added to your beginning capital. So when I click this, when I go to the second financial statement, the statement of owner's equity, just remember that this net income is going to be a part what's going to be added into that financial statement. So that's the order that we prepared it. So let's click it. So if I go to statement of owner's equity, you would have a beginning capital balance. Let's see what they give us. Capital at the beginning, which I believe was 122,000. So I'm going to type in 122,000. That was what we started with. Then I'm going to go to net income for January. We're going to add that, which was again 95,740. And then remember, you subtract out any withdrawals. So less withdrawals for January, which the withdrawals were 16,200. So again, you don't have to worry about putting any negatives or parentheses in, just type it in as is. And then at this point, if we did it correctly, we've got the beginning capital, add net income, subtracts the drawing. That would give you, and of course, I guess you want to type in the ending capital balance into this cell. That'll be the increase to capital. And so 201,540 is our ending balance. Okay. So again, this would be our financial statement number 2. And remember that the 201,540, that's going to be the balance that we're going to go back and put on the balance sheet. That should be our ending balance. If I did it wrong, then the balance sheet will be out of whack. So hopefully we got this thing right. So I go into the balance sheet. At this point, I'm just going to copy the accounts as they were given. So we got cash, find cash. The next one is accounts receivable. Then we've got supplies. And then we've got prepaid advertising was the next one. And then after prepaid advertising was prepaid rent. And notice it's just a matter of just browsing down and finding it, prepaid rent. And then I believe at that point, we just have equipment and the accumulated depreciation. So I find equipment and then the accumulated depreciation. And at that point, I'm just going to go back in and find these balances from the worksheet. So if I go back to the worksheet, again, 73,000 is cash. You just have to plug it in right here. And you got accounts receivable, which is 27.2. And then you got supplies. The balance that's left in supplies is 3,200. And then we've got prepaid advertising, which is 18.6. And then prepaid rent, which is 46.2. And then on the equipment, they want you to put it into this column. Equipment would have been 67.2 right there. They want you to put them out right there. And then less the accumulated depreciation, which was 560. All right. Now, once I do that, what they're showing you right here in this part of the balance sheet is that 66,640. That's just the equipment minus the accumulated depreciation. So that's called your book value. I don't know why they don't have you put something here that says book value, but that's just what that represents. The 234,840 would then represent your total assets. Now, for the last part of it, you just have a couple more things to type in. We've got our accounts payable. That's the only
Question before you get away from the balance sheet.
Okay, yes, question.
Okay, when you put the numbers in on the credit side, like the debit and then the credit side of the balance sheet, that looks like it's going on the credit side.
Yeah, on this balance sheet, everything is just, you're typing in the balance as is. So for example, that doesn't really represent debit or credit for the balance sheet. That just represents the column where they've got their pre-made formulas to give you the totals. So you're just putting your balances for your cash, all your assets, you're putting all those balances right here. Now, yes, they are debit balances, but don't get confused. This is not a debit or credit column on this part. That's just how it looks like.
Okay.
And then this number, they're just showing you a calculation on how they arrived at that net balance for equipment. Okay.
Okay.
All right. So let's see. So accounts payable is 33.1. Type it in, and then your ending capital. So you'd find your capital number. It should be for January 31st. I should find something that says capital. If I can find it. Hold on, let me click that. Oh, there it is. All right, capital, and then go back to your statement of equity. It should be 201,540. Once I type that in, oh, it looks like I must have transposed something, but in any case, let me check and see what I screwed something up. Hold on just a second. 16. Well, notice right away I'm off. I probably just typed the number in wrong. So same thing you guys should do. So notice right now I've got my total assets of 234,840 and my total liabilities and equity say 234,640. So it looks like I'm off by $200, probably because I transposed something. So let me see if I can find it. If you guys find it before I did, let me know if you're seeing
It's the 16.2. It's 16.3.
Oh, is it the supplies?
Yes.
Oh. Oh, hold on. The supply should be 3,200, right? Yeah, I'm just pulling this right off my balance sheet. I'm just going back and checking to see if I have something on my worksheet balance sheet. But that part, I think that's right, isn't it? Because the supply should be 3,200, and I've got 3,200 entered right here. And I'm just comparing this to my worksheet. So I must have typed something in wrong. Oh, I know what it is. It's my drawing. Yeah, my drawing up. Here's what happened. So let me go back. It's actually on my equity statement. Guys, drawing is only 16,000, not 16.2. So I screwed that up. So I don't know why I put that. So your equity should be 201,740. So let's see, 201,740. Yep, and that fixes it. So I just typed the wrong number into my equity statement. So I'm actually kind of glad I screwed that up, just to say, hey, look, if you ever get something off on your balance sheet, you must have done something wrong on one of your other financial statements because it has to bounce. In this case, I entered the wrong number into the drawing. So right now that 234,840 is correct. And notice the accounts payable is 33.1. The balance from your equity statement should have been 201,740. And notice right now your assets equals your liabilities plus equity. So that would take care of that. I apologize about that. All right, so once you got that, then you essentially, you've got our financial statements. And then the last part of this problem, they just want you to go back in and enter those journal entries like we were doing last week. So we had, for example, I'll refer back to the supplies. Supplies was 16,300. So you'd go 16,300 debit to supplies expense. And then we'll credit supplies for 16.3. And then of course you'd hit record. And then for your advertising, same thing, you'd have, looks like it was $6,200 on that. So again, that would be advertising expense, debit, credit prepaid advertising, hit record, rent, we're gonna have, of course, rent expense, credit prepaid rent, and of course that amount was for, looks like that was 4,200. And it took me out. So 4,200 debit, 4,200 credit. Again, rent expense. I'm sorry, let me go back. It wouldn't let me go back and forth there. So 4,200 credit prepaid rent. Hit record. And then the last one was on depreciation. I remember that was 560 debit, 560 credit. Remember, it's always debit depreciation expense. And of course, you'd credit accumulate depreciation equipment. Hit record. And then let me view the journal. At this point, this would represent all of your adjusting entries that we went over from last week as well. So this would be all the adjusting entries you'll ever have to do, at least up to this first part of chapter 5 and the second exam when we get to it. Now, the last part, again, they would want you to post to your ledgers, and I'm not going to do it all, but just, take your posting, your adjusting entries, you take, we'll do one of them. So for example, for supplies, expense, you got the 16.3, post to your debit, like your T account, debit supplies expense 16.3, and then you'll credit supplies of 16.3. Now, of course, on this one, when you go to it, you'll notice, like, for example, with supplies, notice how it says January 1st. So what you're going to have to do is go back to that, your trial balance, and plug in 19,500 right here, because that would have been your starting balance. And then when you post that adjusting entry, which was 16.3, that'll give you that ending balance of 3,200. And then of course, supplies expense would also get the debit of 16.3. So just a kind of heads up, when you post on some of these, you may have to actually enter. Anytime you see like the January 1st date, go back to that trial balance on your worksheet, and you'll need to enter the starting balance as a debit or credit, and then post the adjusting entry. Okay, so again, just to go back, so that's the last part of this problem was once you've got these journal entries entered, the last step is to do what we did back in chapter 4, is just to post. Okay, now, and I think that kind of takes care of most of what I wanted to show you on this problem. Does anybody have any questions in terms of what I just
posting that to the ledger?
Do what?
You're posting that information to the ledger?
Yes, yes. So remember, this is, I just dropped my stylus, that's where I disappeared. Yeah, so this is your journal, and then then you have to go to your ledger and then post every one of these debits and credits into your general ledger. Did you want me to do another one?
No, I'm okay.
Okay, does anybody else have any questions in terms of what you got to do to finish up on this problem?
To finish up, I got that part. The part that I was struggling with before, which actually you solved, was I didn't understand how to do the adjustments. But you
Okay.
don't, the adjustment, you're only taking the part of which is being adjusted to. So when you're putting it on the worksheet, you're only dealing with the amount that you're adjusting,
Correct.
not the total amount, just the part that you're adjusting.
Correct, yeah.
Okay.
So these adjustments on your worksheet are your adjusting entries.
Okay.
So notice we've got 4 adjusting entries. And then when I go to the general journal, there's 4 individual adjusting entries right here.
Okay, I got it now.
Okay. Yeah, there's this, and again, the reason I'm walking, this has taken me about 35 minutes. I'm walking you guys through all this just to give you another bit on it. You guys have to, of course, type it in yourselves and do it a few times. But again, remember, you get unlimited attempts. I've already recorded the actual answer to this already. If you watch the Connect homework video, I've got them all in there already. I've commented on it. But I think just by showing you step by step, at least one time, that the benefit is to help you get to this homework, and also in a couple of weeks when we get to that project, because you're going to have to do this same thing in the project, where you'll be doing journal entries and adjusting entries, and then they're also going to want you to do a worksheet too. So I guess this is my way of showing you how to use a worksheet. Okay, this is probably the only place you'll ever do a worksheet, by the way. But if it helps or assists you in understanding the aspect of the accounting cycle, then it works. Okay, but remember, I will not test you. Like when I say I will not test you on a worksheet, it'll be like, for example, when I go back and look at this worksheet, let's go back to the first part. Here's your complete worksheet. You'll notice, like when we did the income statement columns, when I pulled over the revenues and the expenses, there's a lot of test questions from my test bank that I ask you about. Well, the difference between the credit column and the debit column on the worksheet, if the credits are more than the debits, that represents A, net loss, B, net income, blah, blah. And of course, in this case, since the credits are more than the debits, that represents net income. I don't really think that that's an idea I want to try to test you on, because that's just trying to memorize a worksheet, and I don't want you to do that. So as long as you understand that your income statement, the way you calculate net income or net loss is by taking revenues minus your expenses, that's really what you need to know. I don't want you to worry about the technical aspects of every single cell or row in a worksheet. And that used to drive me nuts years ago. When I was studying for the CPA exam, every now and then you'd get a question, a very technical question, that really had nothing to do with your ability to solve problems. It was really, if you'd memorized it, you'd get the right answer. Now, this is years ago. I don't believe they test you that way anymore, but the way they used to test you is you'd have to memorize everything and then also analyze. And so that could be quite overwhelming. And that's why, of course, the pass rate on the CPA exam is less than 50%. And so then they changed how they test it, and now it's a lot more geared towards your ability to solve and apply your mind. And yeah, you still have to know things. You still have to know the equation. You have to know how to classify. But it's not like you have to memorize every single line item. I mean, to me, that's ridiculous.
You almost discouraged me.
Yeah, I will never do that. They did that to me when I was in college, and I'm like, man, it seemed like I was spending half my time just memorizing. I'm not making this story up. When I graduated, I memorized everything. I studied so hard because I knew all the tests involved. At least back then, I graduated 1993 with my undergrad. The way the programs back then were geared towards is you had to memorize. And if you're not good at memorizing stuff, good luck. And my wife will tell you, I mean, my wife is a CPA, she passed CPA first time. She'd be the first one to tell you she hates memorizing. She's not good at remembering. She's really good with analyzing and applying. And to me, that's the skill you need. That's always been the skill set. And so over the years, the way they used to test, they turned so many people off of accounting that accounting started to have a deficit in terms of jobs. We had jobs they could not fill. And it goes back to, it's not hard. Accounting is not difficult. It's just very unique. It's very specialized. Once you get it down, you can set yourself up for a really good, long, stable job for many, many years. But it's just getting through some of those hoops. And luckily, I think the curriculum at a lot of universities have changed over the years. I know if you go to community college, and I'm not trying to brag on community college, but I feel like you're going to get a lot more good prereq knowledge of how to do accounting than if you just first start off like at an UMSL, because I don't think they're gonna walk you step by step like we do at the community college. I think you're all getting a better sense of how to do this stuff, because later on they'll just expect this stuff, and they won't go back and say, well, you should have learned that 2 years ago, and that's not how they should do it. But I'm just telling you, memorizing, I'm not saying it's overrated. You have to know stuff. But for the worksheet, I just wanted to demonstrate to show you guys how to use it. Okay, and so, once tonight's over, everything's being recorded, you can always go back and refer to this worksheet, even when you get to the project again in a few weeks. All right. Okay, so I'm going to wrap this up on chapter 5.
I have a question.
Yeah, question.
I was looking at the analyze on question 8 about the overstated, and I was trying to figure out which amount that we would actually put in there or stick in there.
All right, so good question. So it says if the adjusting entries had not been made for the month, by what amount would net income be overstated or understated? Well, to answer that, let's go back and let's take a look at what your adjusting entries are. So if I go back to my journal, remember we had 4 adjustments, right? We've got supplies expense, advertising expense, rent expense, and depreciation expense. Those are all expenses that need to go on the income statement. So what you need to do is you need to add up what those expenses are. So if you do that, you've got what, 16,300 plus 6,200 plus 4,200 plus 560. That's 27,260. That's your total expenses. So if I go back to analyze, if we don't put those expenses on the income statement, then of course your net income would be overstated, right? By that difference, which would have been the, what, 27,260. So again, all I'm doing there is I'm saying you've got to put those expenses on the income statement. If you do not, let me go back and look at the worksheet. It's like saying, if I look at this worksheet, those expenses, what we say, advertising, depreciation, rent, and supplies, if you take these expenses off the income statement, then that net income is going to be $27,000 higher than what it should be. Jay, does that make sense?
Yeah, I was just looking, I guess I was just looking at I guess I wasn't understanding it fully. I wasn't looking at the journal 3. I was more looking at the first one that we did, trying to get it off of there, trying to figure it out from there. But
yeah,
well,
on this one, yeah, well, on this one, if you look at how they asked it, it just says if the adjusting entries had not been made. So they're basically wanting you to refer to that journal. Okay.
Okay.
And then they're just saying, hey, look, if you don't record the expenses, then of course your income is going to be higher by 27,260. All right.
Okay.
Cool. Anybody else? Any other questions before I wrap this up? Because I want to transition in a minute. We'll take a break in about 10 minutes, but I'm going to show you in a minute the second half when we transition into chapter 6. But was there any other issues on this problem or anything that you have for me for chapter 5? Okay, well, I hope this will help you. Once I post this in the Blackboard later tonight, and you can review this thing all week at your leisure, go back. If you get stuck on any of the problems, any of the chapter 5 homework problems, you've got this video, you've got my other videos. I've already actually recorded how to do a lot of this stuff already on my pre-recorded videos, but you've got that. You can email me this week, and then don't forget the tutor too if you need to go that route. Okay, all right, so let me wrap this up. And so let's leave 5. We're done with 5. And so then the last step in a moment is we're going to start chapter 6. Now, I'm going to try to do our break in about 8:10. So let me close this out and bring up my PowerPoint. And actually, before I do that, in fact, let me bring up my whiteboard. I'm going to give you another visual here. All right. So this is just me being very very plain description here, just to kind of show you this is what's going to happen in chapter 6. Okay, so remember, and then the journey here really starts from chapter 4. So when I draw these little boxes, it's just to kind of say this is kind of what we're doing. I'm just moving my mouse around so I get a better. I think I need a bigger table and open. Okay, here we go. So, oops, let me go back. Somehow I got kicked out of my screen. So let me go back. All right, can everybody see that?
Are those
All right.
books?
All right, so let me clear that. Let me start over. All right, so here's the basic idea I'm wanting you to kind of get down. So remember, from now on, it really doesn't matter what chapter we're in. We're working with journals, right? Remember, the journal is where we do our first recording of our transactions. We then post to our general ledger. And I want you to think of the ledger as the concept of a T account. Your ledger is going to summarize all of your journal entries. It's from your ledger then that we prepare our financial statements. And if you recall, our financial statements are income statement, equity, and the balance sheet. And then in between, in chapter 5, what we just finished is we did this concept of what they call adjustments. And the accounts that we adjusted were a couple asset accounts. We adjusted supplies, anything that was prepaid, and the equipment account, okay? These adjustments were recorded in the journal and then posted to the ledger, and then you prepare your financial statements. Remember, you have to do these before your financial statements. And the reason, it's all about the time period. And typically, most of the problems that we look at always look at a month, usually a month or sometimes a year. So let's say it's the month of January. So if we got the month of January for the month ended of January 31st, if that's the date on the financial statements, we have to do all these adjustments in chapter 5, record these in your journal, post them in your ledger, and then they prepare the financial statements. That's what we just did. So then the next question should be, okay, so what's chapter 6 going to do? So what happens is this. So once we go into February, remember February would be a new month, a brand new month. Well, what happens is the accounting department is going to do what they call a reset or a close. So in chapter 6, the concept is on closing, and that's just a term for it. But sometimes if you've ever worked in industry or you've ever heard of this, that oftentimes they call it the month-end close. But I want you to think of this as what we're going to be doing is when we do the close, we're actually going to be resetting certain accounts so that you can start over with them in the next period. You kind of want, it's like clearing the accounts so that you can use them again to track your new revenues and your new expenses in the new period. So what we're going to do is in chapter 6, we're going to do this. It's called the close, closing the accounts. We're going to close what is called temporary accounts. And we'll go over that again at our second. I'm going to review that with you again tonight. Just exactly what is a temporary account. We're going to do this thing called the closing of the temporary accounts, which is really the idea of you're going to make these account balances go to 0. And the reason you're doing it is because you want to set those, it's like resetting those accounts to go into the next month, okay? And typically you do this right at the beginning of the next month. It's done real fast in your ledger system. So we're still going to be doing journal entries, closing entries. We're going to be posting those entries into the ledger. And once we post those into the ledger, these temporary accounts will then have a balance of 0. And then at that point, you've reset it. You're ready to start the new period, okay? And I believe this came up a couple weeks ago. I think somebody had asked about, well, what's the difference between what they call a temporary account versus a permanent account? And it's tonight, we're gonna go back and review the differences between temporary and permanent, and I'll show you how to recognize those. And then in this particular chapter, there's gonna be 4 closing entries is all they're going to do. All the journal entries you're going to do in this chapter is closing entries. I think there's one problem where they want you to go back and review the adjusting entries. But the main theme of chapter 6 is there's going to be 4 closing entries in the journal. So what we have to do is we have to take these temporary accounts, we're going to zero them out and reset them for the next period. And then the other benefit is what we'll do is when we do that, we're also going to update that capital balance. Because remember, at some point in time, if you follow the pattern of your financial statements, remember, you've got income statement, you go to your equity statement, and then eventually you go to your balance sheet. What the closing entries, the other effect that the closing entries have is it's going to, in your ledger, it's going to make sure that that capital account, remember the capital account is going to have all those revenues and expenses and all the drawing is going to be transferred into that capital account. And I'm going to show you how they do that tonight. So in a moment, and we'll take a quick break in a minute, but so what we'll do is I'll bring up the PowerPoint, the second half, go through a couple of the PowerPoint slides. I'll try to show you some visual in terms of the different entries they're going to have you close out. And then once I get through that, then I'm going to get into a couple of the problems and connect and show you exactly how to record the closing entry. I'm going to show you how to post it again to your ledger. And I want to make sure you see tonight that once you posted that closing entry, how it affects that ledger account. I want to make sure you see those temporary accounts go to 0. Okay.
A question when you
Yeah.
finish.
Yeah, go ahead.
You gave an example at one of the sessions when you talked about the closing date started in the middle of the week. I think like the 30th to the 31st of December, I believe, and it was on a Tuesday that it closed. And how you take the salary amount and divide by 5 days in a week.
Oh, I think that was just was that an accrual concept I was showing you?
No, that wasn't accrual. But what I'm concerned about, we talked about a $45,000 salary, and I'm saying that can't be for a week. To divide that by 5.
What that conversation was about. We were doing well.
How do you stop in the middle of the week in terms of the amount of money per day? I believe we're talking about.
You just would have to allocate. Are you talking about determining how much of the salary goes in one month versus another month?
Yeah.
That's a chapter 5 concept, actually, believe it or not. we didn't do that just yet. We're actually, Daniel, that's a good question. We're going to actually do that in chapter 12. Okay.
Oh, chapter 12. Okay.
Yeah, but you're right. That's actually what they call an adjusting entry, which is an accrual concept for time periods. But we will do that one. It's called an accrual. We haven't done that just yet. In chapter 5, all we did we did asset adjustments. In chapter 12, actually, we're going to do that in the month of November. We're going to do that where I'll show you how to divide that between 2 time periods. And the only way you can do it is you're going to have to do an adjustment. So this is where the accounting would come in and they would do an accrual. And let's say, for example, you have a weekly payroll of $10,000 of a 5-day work week. So that's what, $5,000, per day, or $2,000 per day. And so you'd have to count what day does the end of the period on. Is it a Monday or a Tuesday? And you just have to allocate that salary based on, you probably uniformly divide it by how many days are in the week, and then allocate it based on that. And I actually did that in the workforce. That was like one of the first things I did when I got out of college. One of my first assignments on my job, I was an accounting trainee, is they had me work what they called them payroll accruals. And it was weird depending on when the accounting cutoff was. And it was very, very technical. We had at our company, we called it on Friday or the last day of a month, it was always 4:30. They just used 4:30 as an arbitrary number. Why not 5 o'clock? But they always said 4:30 is the cutoff date. So 4:30 on the last day of the month, that's going to be when all the financial statements are prepared. And then we'd have some formula in a spreadsheet built up where we had to determine how much payroll accrual did we need to allocate between different months, okay? And it wasn't as simple as you think, but the concept is easy, but it got pretty complicated because you had to figure out what your employees were. Some people were hourly, some people were salary, and it was kind of crazy. But yeah, Daniel, we'll do that actually in chapter 12. Okay. So for now, in chapter 6, we're just going to get to the part where we're going to show you how to do the closing. And then once we reset that, believe it or not, what'll happen is we'll have an exam. I'll have you guys do a project. We'll spend one of the nights we're going to work on. I'm going to actually work on the project with you. And then what I do is I've changed the scope. Once we do that, we're actually going to go back and get right back into the adjusting entries. I'm going to leave I think chapter 5 is too important of a chapter just to leave it. So what we'll do then is after that, after the exam, we're actually going to jump into chapter 12, and I'm going to show you the rest of the adjusting entries. So that's kind of where we're headed after that. So it's coming up. Okay, so I don't want to leave you hanging too long, but for now, we're just going to focus on the closing tonight, and then we'll wrap this part up next week. All right, so it's 8:11. Let me do this. So let me give you guys a 10-minute break. So let's say about 8:21, come back. I'm going to bring up the PowerPoint in chapter 6, and I'm going to walk you through the closing. And then by the end tonight, I'm going to work a couple problems with you as well, just to give you some visuals on what you got to do in chapter 6. Okay. All right. So let me pause. You guys take a quick break, get something to drink, and then we'll come back. I'm looking at my clock right at around 8:21.
All right.
Cool. All right, I've got 8:21. That's about 10 minutes. I went ahead and I shared my screen again. I put up the PowerPoint. And again, let me check it again, make sure I did it right. All right, looks like I've got it. So again, let me know if you cannot see it. But what I'm doing here in a moment is I'm going to walk you through the different views and what you got to do with the closing entries. I think the PowerPoint's got some good visuals. And remember, I've already, I already have my Chapter 6 lecture video recorder, which has the same PowerPoint. You can go back and watch it. But let me just give you some perspective tonight, about say 10, 15 minutes. Hopefully it won't take me longer than that. Just to walk you through the basics. And then I'll go into the Connect, and then I'll show you, I'll demonstrate exactly how you have to apply it when you do the actual closing part of it. All right, so let's get started. So you'll notice on the accounting cycle, here's where we're at. Get my hair on. So we've actually just finished what they call in the book up through really the first 6 steps. And we can debate. Sometimes I think they put a few of these things out of the order. But we're at the point now where we're going to be doing this, what's called the closing entry or the closing, where we're going to do some journal entries. We're going to then post them to the ledger, and essentially we're updating the ledger again, and then we're going to take these things called temporary accounts and make them go to 0. So before I get any farther with this, let me go back. Let me clear out these drawings. And before I get any farther, let me go in and let's talk real quick about this thing called temporary versus permanent. And again, I'm trying to get my mouse going here. All right. So here's an easy way to remember it. So in this chapter, you definitely have to know the difference between what they call a temporary account versus a permanent account. And the way I like to remember these is by knowing what goes on your financial statements. So regarding the temporary accounts, your temporary accounts are essentially your accounts that are on the income statement. So hopefully that's easy to remember. So that's going to be what your revenues and your expenses. That's all that goes on the income statement. Plus, let's be a plus there, plus your drawing account. And that's it. So any account that's revenue, which in this case we've been using fees income, and all of your expenses, those are what they call temporary, and of course the drawing. And what we're going to be doing in this chapter is we're mostly going to be working by closing out the temporary accounts. And off to the side, of course, your permanent accounts is anything on your balance sheet. Okay. And an easy way to remember your balance sheet is think of your accounting equation. So remember your accounting equation, which is what your assets, that's a permanent account. All your liabilities, that's permanent. And of course, your capital account, which is your equity. So if it falls into one of those 3 categories, which is your balance sheet, it's called the permanent account. These accounts we do not close out. In fact, the only permanent account that we're going to be using with the closing process is the capital account. And we're not closing it out, we're going to be updating it. Okay, that's what we're going to be doing. So just remember that everything that's in a temporary account is going to be transferred into that capital account by this concept of closing. Okay. All right. So I wanted to give you that. And now let me go back to the PowerPoint and then let me proceed with this now. So what's going to happen then is they throw another account at you. Now that I just said that, we're going to use this account called income summary to assist us with partaking in our closing. And notice it says income summary account is a special owner's equity account that is used only in the closing process. So let me add my view on that. It's only used in this textbook because when I did closing entries years ago, we did not use an account called income summary. In fact, I don't know of anybody who does. Now, I'm not saying that there could be a company or an organization out there that does use that, and that's fine. But we did it a little bit differently. But to me, that's not the point. As long as you get the concept of closing from this chapter, it doesn't really matter if we do it in 4 entries or 2 entries or even 1 entry, because technically you could do all of your closing entries in 1 entry. So to me, I'd like you to just think of, I'm just gonna follow, just so I don't confuse anybody, I'm gonna follow the textbook approach for this class, and then every now and then I'll kind of give you a few little sidebars and a few little alternative ways to think about it. But for now, we're gonna use an income summary account to assist us with the closing process. And so it's just gonna be an account. That's all we use it for. We'll have, just like a T account, we'll have a debit. It doesn't really have an official balance, but it's just gonna be used to assist us when we get to the actual closing. Okay, now I'm gonna leave that there for now. We'll come back to it in a moment. But I'm gonna go along with they call it a 4-step process. And notice the 4 steps. Step 1, we're gonna take the revenue account, which by the way, we're only using fees income. So take the one revenue account balance, and we're gonna transfer it into income summary. That's gonna be our first step. Our second step is then we're gonna do the expenses. Same thing, we're gonna transfer those balances into income summary. Third step will be to calculate an income summary balance. And then the 4th step, and then of course, once we do that, we're gonna then transfer that balance to capital. So the first 3 steps is basically taking care of your income statement accounts. The 4th step is gonna take the drawing and close it directly to capital. Notice that they do not use income summary with step 4. It's only using the first 3 steps. Now, on a side note, if you didn't want to use income summary, again, in the real world, you just transfer everything directly to capital, which is how they should be doing it. To me, that's how they should be showing it to you. But again, because I know some people who may go back and look at it and then read the textbook and get confused, thinking, why did he say to do it this way? But I just want you to think about this. Eventually, everything goes to capital. Notice, revenue goes to income summary, expenses go to income summary, but income summary goes to capital, and so does drawing. So everything goes to capital. So, you know, I often said if we were like actually meeting in person, I would show you how to do it this way. And then I would say, also do this. What if we didn't use income summary and we just closed out revenue to capital? We wouldn't even need step 3 because everything was already into capital. But because I know some of your homework problems do it this way, that's why I went ahead and left it in this approach. So let me show you the first entry. I'm going to show it to you in the journal. So the first entry would look something like this. So notice step 1 says to close revenue. Now, as I'm showing this, where's my start? So it's kind of like if I want you to think of your ledger right now. So if we had this case, notice it says fees income. So let's pretend we were looking in your ledger and your fees income had a credit balance, a normal credit balance of $47,000. What this step is doing right here is it's going to go into the ledger. It's going to take that credit balance and it's going to give fees income a debit. By debiting fees income for $47,000, that's going to take that account and make it have an account balance of 0, because a credit and a debit, 47,000 minus 47,000, of course, would be 0. But to do that, you would debit fees income, and then they're going to credit income summary. So if we credited income summary, so let me draw up income summary, kind of like if we had in our ledger, we would put that credit right there of 47,000. So again, that would represent our revenue. So that would be step 1, and you're done with it. So journal entry, and then post it to your ledger. Revenue is at 0. That's the first step. The second step, of course, and then let me show you the next slide. The next slide then shows you pretty much what I just did. The next slide shows you, again, what would happen to fees income. Notice here's your debit, the fees income, and then here's your credit to income summary. Okay, right now fees income would be at 0. You just reset it, you're good to go. Now it's ready for the next month. Now, the second step will then be to focus on your expenses. So notice, again, all your expenses, you're gonna probably have several of them. Oh, and I guess let me go back, let me say one thing. just remember regarding, if we're just talking your pure debit and credit rules, remember, because fees income has a normal credit balance, and if you recall your debit and credit rules, revenue would be decreased on the debit side. That's how we're decreasing it, by debiting it. So you're debiting it and decreasing it. That's also part of your debit and credit rules. So when we go back to the expenses, the way you're going to close out expenses is by crediting them. So let me show you. Let's say this is our ledger right here. Like, this is a good slide. Notice we've got our income summary. You just closed out your revenue, and you've got all these different expenses. And you see how the balance in black is what the initial balance is? So this takes salaries, for example. If it has a debit balance of 8,000, if you want to make that account go to zero, you're going to have to make a credit, which is what they did. Notice by crediting it by 8,000, you then get a zero balance. And so for all of these, you'll see a credit for wherever the balance is. And then notice after you posted that, it would be at zero. Now the way the actual closing entry is going to look like is going to look like this. Notice what they do is they do this in a compound entry. They just take all of your expenses, add them up. That's a total of $13,333. So by crediting these expenses, debiting income summary by 13,333, in step 2, you've now zeroed out all of your expense accounts. So all these balances right here in your ledger would now be zero. So at this point, it would take you into step 3. And notice in step 3, let me erase my drawing, you then have to close out the income statements, or I'm sorry, the income summary account. And right now, the income summary would have a credit of 47,000, a debit of 13,333 from the expenses. The difference will be on the credit side of 33,667. That's the balance. That, by the way, represents net income. So if you're at 33,667 in income summary, you now need to close this account. So to close this out, you're going to have to make a debit. So if I debit income summary for 33,667, I then have to offset that with the credit. And of course, the credit is going to go right into capital. So again, on the next slide, they'll show you that. You're going to transfer that 33,667 into the capital account. And essentially, it's going to look like this. So you will debit income summary, credit capital for 33,667. Again, that represents net income. If right now, if the balance of capital is 100, after you've just closed out income summary, which represents net income, you would now have a balance of 133,667 in capital if you stop right there. But at this point, that would just take care of your third step. Notice here's the actual entry where you're debiting income summary, crediting capital for whatever that balance is. So then the last entry, just to show you, the last entry is then to close drawing. Remember, drawing has a debit balance. And so it had 5,000 to close out drawing. You would credit drawing, debit capital for 5,000. Therefore, drawing would then be zero. And then once you put this 5,000 in the capital, capital will then be updated. The entry would look like this. Notice again, they're debiting capital, crediting drawing for 5,000. And then at that point, capital would be updated. And notice the new balance for capital would then be 128,667. That would be the balance that should be on the balance sheet at the end of the period. Okay. So notice here's your capital T account. You had net income that got closed out into capital, increased it, and then the drawing would have decreased it. That's your ending balance. And then the last slide on this I want to show you again is this is just a summary of the 4 different entries that you would have to record in this chapter. Notice the first one is your revenue. The second one is your expenses. The third one is just closing out income summary. And then the last one is closing out the drawing. Okay, so we'll do this in a moment, but if you think about what you got to do in this chapter, you really have to know how to look at a ledger. You have to know what accounts to pull. Notice the only permanent account that we're using is the capital account. Everything else is by definition a temporary account. And I think that's it in terms of what I wanted to show you, at least in terms of what we're going to do tonight in a minute in terms of closing. And this is a pretty simple example on this PowerPoint. I can tell you that depending on the size of your business or company you're working for, what they call the accounting close, which is essentially doing all your adjusting entries and getting your closing entries and preparing your financial statements. Typically, all this is done usually the first week after the month. So October 31st, well, I guess is on a Saturday this year. Halloween's on a Saturday. So November the 2nd, which is a Monday, for most companies, that'll be the start of their close. Because what you do is you always wait till the end of the month. And then usually the first 3 to 5 days of the next week would be the pretty busy time for the accounting department. They're going to round up all the numbers, clean up the ledger, do the adjustments and closing pretty much in about 3 to 5. Usually it takes on average 3 to 5 days to do it. And then everything's reset really, so you're really recording for the next month, okay? I can tell you years ago, one of the companies I worked for, we did our closing in like 3 days. The first large company I worked for, and it was a big company, it was like Monsanto. Of course, this is pre-good technology because now everything's much quicker, but it took us like 11 business days to do the close. It was unreal, it was super long. Literally 2 weeks. We spent half the month just cleaning up the ledger, updating the ledger. And it was basically the first 2 weeks of every month, you're doing the work for the prior month. We always felt like, man, we're behind, but that's just how the system was back then. It's much faster now. But this is what we're going to be doing. Any questions on again, I'm going to bring up a problem in a moment and I'll walk you through it, a couple problems. But any questions on anything that I've just shown you so far? Cool. All right. So let me do that then. I'm going to go back into, let's go back into Connect. I think that kicked me out. So let me log back in for a moment. They always have a timing. If I haven't moved in like 10 minutes, it logs me out. So let me get back into it. All right. So I'm going to do is I'm going to jump into, we're going to go to chapter 6. Let me share my screen again. All right. I'm going to go to the student view. And let's jump down to chapter 6 homework. And let's see, I'm going to start with, I got at least 2 of them I want to get to tonight. I got time, so we'll see where we end up, see what your questions are. But let's just start with the very, very first problem that they give us. And you'll notice a couple of things. It's pretty short. It gives you a list of all your accounts, all your balances. And notice they don't tell you debit or credit. They expect you to know the proper side at this point. But they do give you a hint. It says all the accounts have normal balances. And again, that's just a debit and credit rule thing. So for example, cash would have a debit balance because it is an asset. You're drawing all your expenses, they all have debit balances because that's the debit and credit rule. Fees income would have a credit balance. Of course, that's stuff you got to know from your chapter 3. So this problem says prepare the closing entries for the above transactions. So notice they've got 1, 2, 3, 4 entries, and we're just going to follow their steps. The first entry says record the closing entry for revenue. Now, before I do this one, let me go back, just give you a quick perspective of this problem. So let's assume that we were looking at our ledger, and let's just focus on the revenue account, which of course is fees income. So if we drew up fees income, and again, I like to use the T account ID as our ledger. So fees income right now would have a credit balance of $53,750. That's our balance, okay? Now, for step 1, if we want to make that account go to 0, we're going to have to debit it. So if we debit fees income for $53,750 and then post it to our ledger, that's going to make that account go to 0, which is what we want to do. So for the first step, let's do that. You go down to your journal. I'll look for fees income, which is right there. And then I'm going to look for income summary. because that's the account we're going to close it into. You'll put 53,750 as a debit, and then 53,750 as a credit into income summary. And if you're taking notes right now, you might also want to write this down, because when we get to it, we're going to need it. Is you might also want to make a T account, maybe on a scrap piece of paper right now, and then go ahead and write in income summary, just like you're writing a ledger. And then assume we just posted this, put that 53,750 as a credit to income summary, okay? Because eventually we're going to do the debit. So at this point, that would represent our revenues, okay? Eventually we'll get to the expenses in a moment, but at least get that part down now. So at that point, I'll hit record, and then notice the second part says record the closing entry for your expenses, okay? So the first step is done. We just closed out revenue. The second step is to now close out your expenses. Well, your expenses here consist of the following. Look at the accounts they've given us. So you got depreciation, salaries, supplies, telephone, and utilities. So of course, anything that says expense. And I'm just going to enter these in the order that they've given us. So again, let me give you the visual on this. So I'm just going to bring up one account. I'm not going to draw all of them out, but let's just say we've got depreciation expense. That's the first one they give us. So if you went into your ledger and they say that depreciation expense has a normal balance, that means it would have a debit balance right now of $27.50. And if we want to make this account go to zero, of course, we're going to have to credit it. So we're going to credit depreciation expense for $27.50. That'll be our closing entry, part of it. And then when we do that, that's going to make that account go to zero. And we're going to do that same idea for all of these expenses. They all have debit balances. We're going to credit all of our expenses. So if I go down to the journal, of course, we're going to be debiting income summary. And then I'm just going to list these as they've given us. So we've got depreciation expense. We've got salaries expense. And we've got supplies expense. And then telephone expense. And then utilities expense. All right. And then I'm just going to enter the numbers as they're given. So depreciation will be $27.50. Notice I'm putting that on the credit. Your salaries is $17,000. And you've got $3,000 of supplies. And you've got telephone of $2,600. And then utilities of, I'm sorry, $46.50. Right. So what you have to do then is simply just add up all of these credits. So I'm just going to add these up: $27.50 plus $17,000 plus $3,000 plus $2,600 plus $46.50. I get right at $30,000. So I'm going to debit income summary for $30,000. Now, if I were to draw another picture, and let me go back to the income summary account. So at this point, once we've done this, income summary would look something like this. Okay, so we would have the credit. Well, of course, let me post the debit. You have the debit posting, which represents all of your expenses. And then what we say the revenue was, I believe it was, let's see what it is. It is $53,750. Would be in the credit side. And of course, that would represent your revenues. So again, this is after the second entry. Once you record this, income summary would now have a credit of $53,750 and a debit of $30,000. Okay, so at that point, I would hit record. And then that would take us now to closing out income summary. So to close out income summary, I need to figure out the balance. So at this point, income summary, you just take the difference. Now I'm having a hard time drawing a straight line here. But of course, 53,750 minus 30,000 would give us what? 23,750. That would represent our balance right now in income summary, which is on the credit side. So if I wanted to make this account go to zero, I'm going to have to post a debit of 23,750 into income summary. And then once I do that and then post it, income summary will then be at zero. So doing this third entry on their process, we will debit income summary and credit your capital. Remember, now's the time we use the permanent account capital by that 23,750. And then that would take care of the third entry. That's it. So I hit record. And then the last one says close out the drawing. Well, drawing is at 26,000. And just remember for drawing, drawing acts like an expense in terms of the debit and credit rule. So at this point, drawing has a debit balance of 26,000. That's the balance right now. I'm going to have to credit it to go to zero. So once you credit drawing and make that 26,000, it'll then be at zero. And of course, we're going to put that directly into the capital account. So when we credit drawing, we're going to be, in essence, debiting the capital account. So we'll do that. So then let me click it. So we'll be debiting capital and then crediting the drawing for that 26,000.
Isn't the capital account a credit account?
Well, it's an equity account with a credit balance. Okay, so at this point, let me hit record. Hold on, let me come back to that. Once I hit record, let's take a look at, let's view the journal at this point. So right now, if you're looking at this journal, let me clear my drawings. I just entered 1, 2, 3, 4 separate closing entries. The first entry closed out revenue. The second entry was a compound entry to close out your expenses. The third entry was to close out income summary. And the fourth entry was to close out drawing. Now, Daniel, to come back to your, to go back to your thing on the capital, let's focus on what happens to capital now. So if I look at the capital account, remember, it's a permanent account. Yes, it has a credit balance. That's the rule. Notice they start off with capital right now. The beginning balance was 60,750. That was our beginning balance. Now, once you go through this closing process, look at all the different accounts that affect capital. Well, that's going to be this entry right here. So you've got a credit going into capital of 23,750 and a debit going into capital of 26,000. The debit represented drawing. This credit of 23,750 represented your net income. So at this point, you can then calculate the ending balance for capital, just like we did before. So again, you take the 60,750 plus 23,750 minus 26,000. That would give you right at 58,500.
Okay, what I'm attempting to understand is the capital account is a credit balance account.
Well, think of it like this. It's a permanent account that, according to the rules of debits and credits, it increases with the credit and decreases with the debit. If you go back and review the debit and credit rules back in chapter 3, remember we had capital, which is equity. Remember, capital increases with credits and decreases with debits.
Okay. So that's what I'm saying. The capital account is a credit account. Is
No,
that?
it's an equity account. Again, I don't want you to mix. There's actually no such thing as a credit account or a debit account. Okay. I mean, I think I understand what you're saying. Think of it like this. The capital account is part of your accounting equation. It's part of your balance sheet. And the way that the debit and credit rules affect capital is that capital increases with credit and decreases with debit. Okay. Because remember, all accounts, I don't care what account you're looking at, all T accounts, it's universal. All accounts have debits and credits. There's debit and credit entries on just about every single account there is. So just specifically just the capital account, that's the account that goes on the balance sheet. That's essentially your equity. And by rule of definition, capital increases with credit and decreases with debit. And so what I just did here to show you this, the basic idea here is, remember, net income should increase capital, and it's doing that. The drawing should decrease capital, and it's doing that. By crediting capital, that's an increase. By debiting capital, that's a decrease. So if we start with $60,750, since we had a profit, we're adding that profit, and we're subtracting the drawing to come up with that new balance. So these closing entries, what they're doing is, guys, this is your equity statement, isn't it? Remember, when you do the equity statement, how do you prepare it? Remember what you do? You take beginning capital, right? Like we've already done this. You take your beginning capital, you add net income, and you subtract out your drawing. So you've actually done this already. Of course, that'll then give you the ending capital. You actually have already done this. You did this with your equity statement, right? So all we're doing in this chapter is we're showing you how the ledger would then reflect what that income, what that equity statement actually should be, which is what your capital balance ends up being. So this 58,500 that we came up with, that should be the balance on the balance sheet, which coincidentally should match the ledger account of 58,500. So if you're thinking logistically, so how does all this stuff happen? This would all happen during the accounting close process. So, you know, the question should be, so do we prepare financial statements first, or do we do adjusting entries and then financial statements and then closing entries? And the answer is yes, yes, yes. You kind of do it all simultaneously. So
Okay, I got another question. When you
we did it is we did all the adjustments and then we did the close, but we had a customized accounting software that it knew how to prepare reports at certain dates. So we basically did all of our ledger work. We always knew we were done with the close and all the financial statements once all of our ledger accounts went to zero. That's how we knew we were done with it. And then it was kind of like simultaneously when we were doing it, we were also analyzing the financial statements for accuracy. So that's one part we haven't really talked about in this class just yet, because sometimes we would go through a close and we would look at our profits, we'd look at our income statement, and just based on comparing it to our monthly forecast, we knew something, if there was a problem, we could figure out that something just didn't look right. We'd have to go back in and change our ledger. We have to go back and fix adjustments. Maybe there was account coding errors or whatever, because we would simultaneously be doing our analysis as we were closing out our ledger, because the system let us do that. And so that would also help us fix anything that would look kind of weird. So you really became an expert on how to use that ledger, because that ledger is where everything is. All your financial reports are pulling from that ledger, and this ledger is what gets audited. So you got to make sure that whatever you put into that ledger, you got the backup for it. You have to explain it. And anytime you're working at a large company, there's so many ways that mistakes and errors can be input into the system. You really have to be in your game and use a lot of judgment to make sure that everything looks accurate. And even after that, there could still be mistakes, stuff that you miss. And you just hope that if you miss something, it's not material, because you don't want to materially mistake your financial statements. That could be a major problem. Okay.
I've got a question for you.
Yeah, Daniel.
When you got the 60,750 and the income statement of the net income of 23,750, the drawing is greater than the 23,750 because it's 26,000.
Okay.
And I'm saying if you take the drawing from the income statement, you've got a negative number because of those numbers. And how are you applying a negative number to that 58? You're subtracting the 2,000 from
Hey,
the,
Daniel, look at this. So okay, hold on, stop. Look at this. So we started with 6750, right?
right,
We ended up with 58,500, right?
right.
Doesn't that represent a decrease?
Yeah, that's a decrease, but
That's a decrease.
I'm looking at
Because, you're right, because the drawing, that's 26,000, that decreases capital. And then, of course, net income increases capital. But you're right, in this case, we had more debit, we had more of a decrease than an increase, and the net effect is that overall capital did go down. That's correct.
Okay, what I'm trying to understand is that we have the beginning capital, then we have the net income, then we have the draw,
Correct.
and then we have the ending income. I mean, the ending capital.
Right.
And as I'm looking at it, is that 26,000 is greater than 23,750.
Correct.
So that gives me a negative number.
Correct. So what's that negative number? What do you get?
Doing the arithmetic. Wait a minute. Okay, I've got a negative 2,250.
Okay. So would you agree then that capital, based on what you just said, capital should go down by 2,250, correct?
Right.
So if we started with 60,750 and we ended with 58,500, what's the difference? If I take 60,750, and if I subtract out that 58,500, what should that difference represent?
Is that the 2250?
That's your 2250. So because there was more drawing than income, capital actually decreased in this problem.
Okay.
So it's not an assumption. It's not just assumed that capital is always going to increase. Now, in terms of your objective in running a business, yeah, you want capital always increased. You definitely do. So this could be, and later on we'll get to the analysis, but at this point, net income is being outpaced by this drawing. I mean, you don't want to, I mean, this is not the good scenario. If they kept doing this every single month, if they kept drawing on capital every single month and capital started going down, eventually you'd get to a bankruptcy issue, and you don't want to do that. So here's another scenario. So what we're calling as a drawing, which is a withdrawal, if we were looking at corporate finance, which is kind of like what, if you take the next accounting class, which is financial accounting, they're going to call it dividends. And dividends is when companies pay, like if you're a stockholder, companies pay out dividends as a reward to their shareholders. It's the same idea. And so drawing and dividends, the same thing. So when a business pays out dividends or drawing to their shareholders, if they get to a point where they can no longer make a dividend payment, that would be a serious red flag issue for a potential investor to say this company is having some cash flow issues, all right? But because you're bringing up a really good point, because you're thinking, wait a minute, capital went down. Shouldn't capital be going up? And the answer is, yeah, you want capital to go up, but that's not always what happens, because sometimes, you know, once a business starts to pay out dividends, they like to keep those dividend payments. They like to keep those shareholders happy. And anytime a company misses a dividend payment, that might be a concern to an investor to say, hey, look, wait a minute, what's going on? Is the company having problems with their cash flows? And that happens a lot. And, you know, you think about some of the stuff we're going through these days with this pandemic, and, you know, there's a lot of companies that are, you know, I'll just use an example. Think of sports, the sports industry right now. And I'm not talking just professional sports. I'm talking about like at the college, even the high school settings. Everybody's losing money. I can tell you with college football, that's $1 billion industry. They're losing like crazy because you can't have live sport. I mean, there's very limited. Major League Baseball, they're taking a big hit in terms of their money right now. And so if they're looking at their balance sheets and their income statements, their capital definitely is hurting. Their cash flow is hurting. And so eventually we'll get to some of this analysis, but that impacts the employees. You know, if we're talking about like sports, you know, if I was a Major League Baseball player, and I was just getting ready to go into free agency next year, I'd be a little nervous because if I'm wanting to get paid, get some big salaries, it may not come next year because some of these teams are a little nervous in terms of their cash flow. They don't know when they're going to get back to normal. And it's the same thing. This is a trickle-down effect to not just with sports, but other industries that feed into the sports. You know, whether it's the food or the beverage industry, supply chains are being hurt right now. So yeah, the idea is capital you think should be going up, but it really depends because you know think of the airline industry right now. You know, they're crying out because they want to get a bunch of stimulus money. All these airlines, nobody's flying. I mean, yeah, the airlines are up and doing some transportation right now, but you know, I think it's down 70–80% of what it used to be. So there's a lot of people that are unemployed, a lot of people getting laid off, stewardesses and pilots. The airline industry in general is hurt. That could hurt companies like Boeing, who has airplane orders. They are building airplanes, and if there's no flights, a lot of these orders could be canceled or delayed. And so the trickle effect is eventually it affects, if we get to back to the accounting aspect of it, it can affect your income statement, which then eventually when you get to your closing, could then of course drive your capital down. Now, in this problem, capital right now is at 58,500. Now, a warning sign is if that capital ever got to zero or negative, then that's when you know you're probably in a bankruptcy type of issue, and that's typically what happens whenever you see companies go bankrupt. Is their capital? What happens is they have debt, they have more debt, and their equity, their capital is actually gets to a negative. It's kind of like you're upside down, and then that's when you cry uncle and you say, I can't do anymore. I got to file bankruptcy. Okay, but that's more than what you asked. But I'm just saying, you bring up a really good point. Yeah, you know, typically you want your capital to be increasing and not decreasing. Okay, so that's a long answer, but I think it's worth just talking about for a minute. I think sometimes it's good to take a perspective and sit back and say, what exactly are we doing here? But this is just the technical aspect of an accounting system because we have to process, we have to record these closing entries. Okay.
Are you teaching financial accounting next semester?
Yeah, I got it next semester. I got it on the board. So I tried to make sure they gave me, and I don't get to choose for my online, but I tried to make sure they gave me a financial accounting class for the spring because just in case I've got 4 applied accountings this semester, and I know some people are not accounting majors, but I'm hoping that some people will then take my financial accounting and then we'll explore that concept of that idea. In the financial accounting, we'll get into the dividend idea, which is very similar to the drawing, but dividends is what the corporate finance would call it. So,
okay.
All right, does that help, guys? On this is just your first problem, but this problem actually takes care of, this is all the 4 entries that you'll have to do in this chapter for all the closing. Okay. Now, this problem, all they have you do is just do the closing. So I like to do, I'm looking at my clock, so I wanted to look at at least one more, which is number, I believe it's number 4. Yeah. All right, now, on this problem, you'll notice it does the same thing. It gives you, it says the ledger accounts of Avino Company appear as follows on March 31st. And once again, just to kind of review, they give you every account in their ledger. Notice you got the account numbers, the account names, and the balances. They tell you that all accounts have normal balances, so there's your debit and credit rules. They want you to prepare the closing entries just like we just did, which we'll do. And then I like this problem because it also has you then post the transactions into the ledger. And then it says, hint, be sure to enter the beginning balances. So I like this problem because I think it really demonstrates not just the closing entries in the journal, but it also emphasizes this is what's happening in your ledger. So again, I'll show you this, and this is something, again, you need to know not just for the exam, but eventually when you get to that accounting project, you're gonna have to do all these again in a journal and a ledger. So let's do this again. So remember, you gotta know the differences between temporary and permanent. And typically, whenever you see these problems, they always list your asset accounts first. In fact, everything until you get to the drawing account is all permanent. Once you get to this drawing account, everything from drawing down below would be all of your temporary accounts. You get drawing, fees income is your revenue, and then everything else is your expenses. So in this problem, notice we'll go down to the journal again. I think what we'll do is I'll post them as I go. So the first one says record the closing entry for revenue. Well, revenue, which is fees income, is $374,460. So I go to, remember you got to debit it. So you find fees income, you're going to debit fees income, and then you're going to credit income summary. Again, let me go back and get the amount. I forget the number. It's $374,460. It's like, not to make a joke of this, but could they have come up with a more strange number to remember? Why not just say 370,000? I don't know. They're being very technical, but anyway, 374. I'm surprised they didn't put cents on it. Why not say 374,460 and 75 cents? I don't know. To me, it's a weird number to put. I just find that as a bizarre number for them to have you put in there. But in any case, you hit, so 374,460, hit record. Let's go back and look at the journal. So once you do that, if I went to my ledger, let's post it. So I'm going to post a debit to fees income. Notice I'm going to go ahead and put the beginning balance in. So we had, I guess they're not going to let me do that on this one. Well, if I put it right there, so we had with 374,460, right? So we put 374,460 as my balance. If I debit it, 374,460. Look at what happened in the ledger. Notice this was the beginning balance. Once we post a closing entry, this is what you should see. You should see that as 0. Okay. And then I would look for income summary. I'm going to go ahead and put that credit right there. 374,460. And right now, that would represent your first posting. That would be your revenue is closed out. And now income summary has the revenue number. So that would be my first one. So then I would go to my second one, which is simply to close out the expenses. All of your expenses are listed in order. I'm just going to take them in order. Of course, the first one is going to be, we're going to be debiting income summary. And then let's just take them in order. It's depreciation expense. So I'm looking for depreciation. And then I think the next one is insurance. And then you've got rent. And then I believe it was salaries. And I think they just kind of gave you these in order. And then I think the next one was supplies. And then telephone. And then your utilities. And I think that's it. And then all you have to do is take these balances that's in this basically your ledger, and make them go to 0. So depreciation was 21,160. That's going to be credited. Insurance was 11,004. Credit. Rent expense is 33,000. Credit. Salaries is 166. Credit. We've got supplies is 5,600. Telephone is 6,800. And then utilities is 9,400. All right. And so once you get to that point, you just add them all up. So if I do that, 21,160 plus 11,400. Plus 33,000 plus 166 plus 56, 68, I came up with, and I'll double check this again. I came up with on my calculator, 253, 360. And you can double check me on that. If you come up with a different number, let me know.
Go back to the expense column.
On the original account numbers,
Yeah.
they're right here. 21,160, 11,4,
Now,
33.
how are you putting that in?
That's credits.
No, that's for the elimination. I
Right.
mean, move it to zero. But I'm saying originally, when you
In the
have
ledger?
the expenses, yeah, when you have the expenses, that's in the debit column.
So it just erased what I put. That's okay. So if I went into my ledger right now, right? And so the way it would show up right now in your ledger, so let's go to depreciation expense, 21,160. Depreciation expense right now would have a balance of 21,160. All right. And then when we do the credit posting, I would do a 21,160 credit to depreciation expense to make it go to zero. But right now, it would have a debit balance, or it'd have a debit balance of 21,160. Just like insurance expense would be 11,004. You'd have rent expense of 33,000. Salaries is 166. So what I'm doing here is you have to actually go into the balance column, and they want you to enter those into the ledger. Supplies expenses 5,600. Telephone is 6,800. And then utilities is 9,400. And then when we record that closing entry, we would be posting credit postings to each of these. So we'd have 11,400 credit. Rent expense would be 33 credit. Salaries is 166 credit. Whoops. Supplies would be 5,600 credit. Telephone 6,800, and then utilities 9,400. Okay, so that's after you posted that that closing entry for your expenses. Notice all these accounts in your ledger, all your revenue zero, and then all of your expenses would then also be at zero.
Okay.
Okay, so when I go back, I think when I go back to the journal, I think it erased it. So let me go back and put it in real quick. So again, you have. I should have hit record before I changed the page. I don't know why I did that. I think it's kind of weird, but let me just put these back in real quick. You have depreciation, insurance. Whoops. Sorry, that should have been rent. Hold on. Rent, salaries, supplies, telephone, and then utilities. Okay, and the respective, again, depreciation was 21,160, and then I'm just going to put the credit right there. Insurance was 11,400. You've got rent, which is 33,000. Salaries 166. Supplies, which is 5,600. And you've got telephone, which is 6,800. And then finally utilities, which is 9,400. And then of course I just have to add up those numbers. Let me add them up again. I forget the number I had. Let me add these up again. 21,160 plus 11,400. 33,000, 166, 5,600, 6,800. I came up with 253,360. All right. So at that point, I'm going to hit record. Let's look at my journal, and notice that this would represent all of my expense accounts that I just closed out. And then the next thing I'd want to do is let's post these. So let's go to income summary and put that 253,360 as a debit. And then I think I've already posted the expenses. So the 253, 360, if you look at the income summary right now, we have the revenue and then we have the expenses. Now notice on income summary, once I did that, it automatically calculated a balance. So it says 121, 100. And of course that should represent a credit balance because my credits are more than my debits. Okay. So the way you want to do this one, let me draw my T account, give you another visual here. So if I was in income summary, which we are right now, because that's going to be our third closing entry, we've got the credit of 374, 460. We've got the debit of 253, 360. And right now, that balance, which is 121, 100, that's basically, that represents net income. So if we want to make this income summary go to 0, we're going to have to debit it for 121, 100. So let me go ahead and do that now in the ledger. Then we'll go back into the entry. So we need to put a debit of 121, 100. Notice when I do that, right away your income summary goes to 0. If I go back to the journal and do the transaction list, let's go ahead and post that. So I'm going to debit income summary and of course credit capital. There's the capital for 121, 100, debit, 121, credit. I'm going to hit record. I'm going to go back to my ledger and let's go to that capital account. Right now, your capital account started with 130,000 as the beginning balance. And right now, once we post this entry, it's going to go up by 121, 100 because that represents net income. So that would just take care of right now. That would just take care of your capital posting. We've got the beginning balance, plus we just closed out income summary. Now we have one more.
Tell me,
Yeah, go ahead. Go ahead.
in the income summary,
Yes.
that you had a balance amount of that 21 something or 121.
Yes. What about it?
Explain that a little more. How?
Okay, that's just your debits and credits. You take the difference. I just took 374, 460 minus the 253, 360. That's just the difference. So this difference is 121, 100. And I put it on the credit side because the credits are more than the debits.
Okay.
Now, you could get a situation if you had debits that were more than the credits, meaning if your expenses were more than the revenue, you could possibly have a debit balance. That could happen. But so far, all the problems we've looked at, they had net income. Anytime you have net income, you should get a credit balance because that means your credits, which your revenues, are more than your expenses.
Okay. What I'm attempting to understand is how you get that capital balance.
Okay.
In the
So, okay, let me go up. So to start the problem, let me go up. Let me just clear this. So they gave you a capital balance right up here of 130,000. I went ahead and entered that as your starting balance. And then when I just closed out income summary, we put that 121, 100 into capital as a credit, and that's how they would have increased the capital account right now.
Okay. The balance is greater than the credits.
Well, right, we have one more entry. We haven't done the drawing yet, but right now, if we start with 130, that's our start, and we're closing out net income, which should be increasing capital, we now have a balance of 251.1. Now, the hope is that we'll have to see what the drawing is. In this problem, the drawing is going to be 13,000. So that 13,000 is going to be debited to capital. We're going to be reducing that in a minute. But overall, we'll get an updated balance once we've closed drawing it.
Okay.
Okay?
Right.
All right, so let's go back and do that, and then we'll come back to the capital. So the last entry will be the closeout drawing, which drawing has 13,000. So we're going to be debiting capital and crediting drawing for 13,000. And then let me record it. Let's view everything. Let's view the journal. So that's the last entry. And then let's make sure we got the posting. So capital, which was at 13,000, gets credited. So now it's at 0. And then capital is going to get the debit. Notice how right when I posted that debit to capital, notice that the balance is now at 238,100. So Daniel, we start with 130. We're adding net income, subtracting out the drawing. Overall effect is ending capital is right now at 238,100.
Okay.
If we drew the formula like how we did the equity statement, where we'd say beginning capital, which in this case is 130, and if you said add net income, which in this case is 121,100, and then subtract out the drawing, which is 13,000, that should give you the ending balance of capital, which should be 238,100. That is what your equity statement would look like as well.
Okay.
So the reason I want to show everybody this is because you guys have done this already. You did this already when you did your equity statement. So that brings up another point. If you want to go back and look at these closing entries are also in effect doing your equity statement for you. They're basically, it's the process by which you're getting that capital account in your ledger to be the same number that's on your balance sheet and the equity statement. It's like this is the process of how you transfer all that net income and the drawing into the capital account. So you've done all this when you did your equity statement. Now in this chapter, we're just doing the closing entries, which is actually kind of like behind the scenes. Now we're actually accomplishing how we actually get these balances in the ledger to reflect that. Okay. So, and then we're just doing it in 4 entries. I think back in my day, I think we did most of our closing entries. Of course, I had several locations, at least in one of the companies I was at. So most of the time we just had one long compound entry because it was easier for us to do it that way. But I think I think in terms of when you're first exposed to this, to show you how we're doing revenues and expenses and then drawing, and you know, it's okay. As long as you understand the concept of we're closing it out, that's what you need to get. If some of you go into accounting and you are involved in any of this process, you may see the actual entry look a little bit different. You'll probably have several debits and several credits combined in one entry. But the idea is, as long as you know the impact and how it's affecting your ledger is what you really need to kind of take out of this. Okay. All right, now questions on what I just showed you. So here's your journal. Again, these are all of your closing entries right here. 1, 2, 3, 4 of them. This is the process we're going to follow. So you need to understand what we're debiting, what we're crediting. And then also, I like in this problem, make sure you understand the ledger aspect of it as well. So this is a really good problem just to kind of go back and make sure that you're saying, yep, there's your balance. You had a credit drawing to make it go to 0. Fees income had a credit balance. You have to debit it to make it go to 0. And so this is how we're doing it in this problem. And, you know, one of the things we did in industry is it was usually towards, we had cutoff dates in every day, and we always had a certain date at which we said nobody mess with the ledgers anymore. Okay, and we'd monitor this every day. Every day we'd get a fresh ledger printed. In fact, we come in the office, and this is how we used to do it. And now everything's in real time. But the way we used to do it is they would run the reports, and every morning they would give you a brand new ledger, and you'd always double check to make sure that all your locations were closed out, just to make sure that nothing new was entered into your ledger. Because keep in mind, when you're at a big company, there's a lot of recurring entries. There's a lot of different moving parts. And quite often we would have to work with other divisions and other departments, sometimes they would do what they would call these inter-office transfers, these inter-office entries that they wouldn't tell us until they actually got posted. So anytime they did that, sometimes we'd have to actually go back and we have to reclose the books, because we'd get a ledger and they say, hey, wait a minute, one of your locations didn't close out. And I'd be like, what happened? And it was because another department posted some new entries that they didn't even tell us about. And that was where you'd get yelled at, like, what are you doing? You know, I mean, you're making more work for me. You should have told me this ahead of time. So there was an awful lot of manual posting back in the day, a lot of ways to make transposition errors. And sometimes you'd have to give it to somebody else to look for. You'd spend hours trying to find out why didn't your ledger close out. And of course, that was just part of the stress of accounting. We had in our business, we had at least what they call a 4:30 cutoff, meaning that you had to get all of your entries in for the day by 4:30. And what would happen is we get all of our journal entries typed in, and then we would then send those off to a clerk that would then enter them. And of course, the idea is you had to get into the clerk by 4:30, because the next day you wanted to have a fresh ledger to look at. Which, when you kind of look back on it nowadays, that seems so out of date, because nowadays with accounting technology, everything is literally real time. You basically post the same day. You're going to get your updated ledger right now. You don't have to wait till tomorrow. So that's kind of like the neat thing now. And as I'm talking about this, you know, with technology, it's really changed a lot of the face of a lot of accounting departments. You no longer need this many you still need some people to do some of the daily number crunching, some of the daily bookkeeping, closing type of stuff. But the need for a lot of these jobs actually went away just with technology. So that's why, like in accounting, the big push these days with careers is not just the bookkeeping aspect, which you need to understand, but it's more of the critical thinking, more of the judgment type of aspect that you need these days in the field of accounting. But you still need to understand this stuff, because lots of times, you know, you need to understand how the ledger system works, because, you know, most of the time there's going to be mistakes and errors that you have to go in and find it and fix it, and no computer is going to do that for you. And this is where, you know, lots of times you're comparing your financial statements to a forecast, and you can just see something doesn't look right. And we always had to report when we got to the end of the close. The last day is you take your results, your profit or loss results, and then our manager would then report those to our controller. And of course, I was like the accounting manager, analyst type. My job was to explain everything to him and making sure everything was covered. So that way, when he went to the controller and they would ask questions, that we have all of our bases covered. You'd never want to get into a meeting and they would say, well, why did you lose money? Or why, you know, why this, why that? You had to have everything explained, because the last thing you wanted to do when you're going into a meeting and somebody asks you a question about your results, the last thing you want to say is, I don't know, or I'll look into it. So that would just show that you're not prepared. So there was always some heightened stress about reporting day. We had one day, it's called the reporting day, and it's where everybody kind of holds their breath, because then once you report the numbers, once you get back and the top guy says you're fine, you're kind of like, then the next 2 weeks you're kind of taking a break. You're not, you know, working all those extra hours. So that was at least life in the 90s back in the day. But nowadays there's still stress. It's different type of stress. But a lot of the stuff that I just showed you in this problem number 4, most of the stuff, once you enter your entry, is literally updated instantly. You don't have to wait till the next day. So you'll know right away if something didn't close out. So, all right, but back to this problem. Was there anything else? This covers essentially everything in chapter 6 that you need to know in terms of the closing, in terms of how it affects the ledger, and then also very important in terms of how it affects the capital. Typically, when you get to exam and quiz type of questions, it'll focus on how to close these accounts out. And then when you get to the ledger, quite often one of the questions will come up. It'll be like, what will be the new balance for capital after you did the closing? So in this problem, the updated balance would have been $238,100. So you definitely need to know how capital gets affected and how all of your other temporary accounts, again, get zeroed out. Okay.
Now, you talked about the transposition in numbers.
Yes.
I think I saw that you divide by 9 to try to find a transposition.
That's pretty funny. We used to do a couple of things. Anytime we were off, well, we actually would do this. We would look at the difference, and sometimes we would say we would either double the number, we'd multiply the difference by 2, or we would divide by 2. Because the reason we did that is we would look to see if maybe we entered something twice the wrong way. But there's a couple little tricks you learn in the industry anytime you transpose a number, but quite often you just have to kind of take a break and come back and look at it and see if you entered something in right or wrong. And sometimes when you're staring at numbers all day, I can remember, of course, we're talking over 20 years ago, back when I was in the corporate finance area. We're talking days where I might spend all afternoon looking for something and I can't find it, and I'm getting stressed. And then literally the next day when I walk in at 8 a.m. or whatever, I find it right away. And so sometimes it's just a matter of I sometimes go to my coworker and say, look, I can't figure out why I'm off. Can you take a look at this? And they got a fresh pair of eyes and they look at it. And sometimes they just say to take a break, take a step away. But I always found the most stressful time was the fact that we always had this 4:30. I never forget it. We always had what they call a 4:30 JV cutoff, journal voucher cutoff. And you were super stressed that day because you want to make sure you get everything in well before 4:30. And quite often, you usually work until 6 o'clock anyway, just getting updated for the next day. And then you're hoping that once you posted it, that the next day your ledger comes over clean. If it doesn't, then you got issues. And we always stressed teamwork. And I always remember, I got to the point where my stuff was pretty clean, but being in a team, you tended to want to help your coworkers. So, the idea was, if you get your work done, I can go home, right? Well, of course, you want to get promoted and you're trying to move up the corporate ladder. You always want to help the others. So what I would always do is I would always try to help my coworkers. And sometimes if you got on a bad team, and we had a team once where we had a couple new people and they didn't know what they were doing. You're new, you're learning. And we just had some new people. They kept making the same mistakes every single month, and it just drove us nuts. And so we'd often just get to a point where we'd be, okay, where's the problem? And we'd spend up helping them, extra time helping them, trying to show them what they're looking at. Sometimes they still didn't understand it. And these were some of the fresh college graduates. I mean, this is back in the late 90s. This was some of the new college graduates just coming out. And we were trying to teach them how to work the system. They never did that in college. But it was amazing at that point just to see sometimes they did not understand how to critically think. They didn't quite understand the big picture, how their journal flowed to the ledger. They didn't understand a few things. But quite often we'd spend a lot of time helping our team members, making sure that the stuff didn't get behind. Because, if you go home and your department, there's other people that need help, everybody really suffers in the end. So you had to make sure that everybody's assisted. And then in the end, I remember getting some pretty nice bonuses and some nice raises at the end because, typically you get rewarded. They see that you're helping people and you're not just going home. Because we had a few people that once it was 4:30, they got their stuff and they go home. And during close, it's okay as long as nobody needs help because, they looked at it as a team effort. And at the end, you kind of get reward. I mean, there's always politics and culture in any place you work, but that's how that place tend to work. So, all right. Questions on how to do closing. That's it on the problems tonight. I've showed you a couple of them in chapter 6. I hope that's sufficient this week as you start to practice these. Now, the goal is next week when we meet again on Monday is to recap anything else in chapter 6. Hopefully you got some questions for me. And then I also intend to do some review with you next week. So next week's class will be more of a, recap chapter 6. You guys let me know what problems you're having. And then also I'll have some review. I'll have a study guide. I'll have some review. We'll talk about the exam next week in terms of the components. And again, the exam's not going to start. It'll be the week of November 2nd. So that means that the chapter 6 material won't be due till November 1st. So I'm going to update the Connect today. I'll make sure I get that updated. But does anybody have any questions about where we're at now or where you should be at going into our next meeting next week? It's pretty big. Make sure by next Monday, you're asked questions, you're ready to go, because that'll be it on chapter, this is it with chapter 6. It's not a long chapter, it's just finishing it up. But make sure you're ready to ask me questions, because I intend to finish this and also recap it and do some practice with you to get you ready for that test, which will be your exam number 2. Okay. All right, final thoughts for tonight, anybody? I hope this works. You know, one thing I was thinking about coming into tonight's chapter, this is the first time I've ever done a live virtual lecture class on closing entries. Every time I've been teaching for over 20 years, and every time I do this in person, I use T accounts in the class, and then we spend a lot of time going back and forth, and it seems like there's always a lot of confusion on the closing entry. So I'm hoping, we'll see how it goes this week, but I'm hoping the fact that I've got this up on the screen and you can visually see how I'm recording the closing entry, like in this problem where I recorded it and then I posted it, and then you can see that these bounces, these temporary accounts are now at 0. I'm hoping that'll help you retain this as you practice this, as you now go back into Connect and start to practice this. We'll see. I'm hoping this will be effective. Again, that's the one thing I'm hoping that this technology is actually maybe in one way maybe a little bit better than an in-person setting, at least for this, just to show you something initially, because I'm showing you visually on a computer and I'm recording this, and you can go back and watch this video as many times as you want, you know, once I've made it available on Blackboard. So that's the one thing that kind of makes me excited about using this. But I'm sorry, Daniel, go ahead.
At what address do you pick up the recording of these sessions that you've done?
Oh, it's in Blackboard. Yeah, let me go back. Let me change my screen just a second. Let me make sure I'm in Blackboard. Let me pull it up. Trying to make sure. It should be in Blackboard. Hold on just a second. It's under your live virtual link recordings. Hold on, let me just, I think I got kicked out of Blackboard, but let me check. Let me do one thing real quick. Yeah, if you go into Blackboard, let me do that real quick, because I think I was in there earlier and I think I got kicked out. Yeah, the problem was I got logged out. Hold on, let me log back in. All right, so let me share my screen. All right, so in Blackboard, if you go down to where it says Zoom meeting recordings right there, again, that's where I post all these sessions. So if I click that, you'll notice that the last time we met was last week, and hopefully you can see that we've got, there's October 12th, that was last week, then October 5th. All these are, I route it through YouTube, so that way it's easier for you to open. But if you just open this up, that'll click everything I talked about with you guys last week. In tonight's lecture, it usually takes me about 15 minutes to download it. It'll probably be available by 10 o'clock, 10:30 tonight. I'll put it up, it'll say Zoom recording October 19th. And you'll be able to go in and view this all semester. And all my recordings from every class is in this section so far. I think that we've met. There should be like 8 of them. 1, 2,
Okay.
5, 6, 7. Yeah, there's eight weeks, so there's 8 recordings so far. So this is actually week 9, believe it or not. So, but yeah, so that's where you go to find them. And then I think anybody else, just as it, since I'm talking, a quick reminder, remember, if you click my learning modules, like this is the learning module link, again, if I go down to chapter 6, you'll notice I've got, there's the lecture, there's some textbook illustrations. I've got some textbook illustrations on how to work all this stuff. I do that in T accounts. And then I've got a couple textbook illustrations. And then you'll notice that I've even got the Connect homework illustration also in there as well, where I basically take all the problems with all the answers and I comment and kind of explain in terms of how to get to those answers. So that's another avenue I'm trying to give you guys for a learning resource, okay? And I don't mean it as a way for people could just go in there and copy the answer and get the credit. That you could do that, but that's not gonna help you on the quiz, and it certainly isn't gonna help you on the exams. So, but it's a learning resource that I pre-recorded all these. It took a lot of time, but I think for the benefit of the class, I did it for you guys. since we're not meeting in person. So hopefully that'll help. So, all right. Final thoughts on tonight. Any questions? We're about at 9:41. So any other questions about tonight or where we need to be by next week? Anybody know anything at all? All right. Was there a question?
I said, no, sir.
Okay, cool. All right, so I'm going to wrap this up in a minute. So I'll get this posted in Blackboard tonight. Next week, we'll be recapping 6 and doing a little bit of in-class review with you. And then to get you prepped for that test. And then the test will be the following week, the week of November 2nd. Okay. All right, final thoughts before I wrap this up. Cool. So we're about on time, 9:42. That's a good pace. So practice this stuff this week. Email me if you have questions. Remember, we've got that tutor. I got the tutor information in Blackboard. Go to the announcement page. You got the tutor link. And then, I try to be as responsive as I can. Just let me know if you need any help with any of this stuff. And then, again, we'll meet back here in 1 week. Okay?
Thank you.
Thanks,
Thank
Daniel.
you.
Anybody else? We're good?
Thank you.
Okay. All right, guys. Have a good evening. Stay safe. And then, again, we'll see you in 1 week.
All right.
Cool.
Bye.